In his autumn statement today, Philip Hammond, the Chancellor of the Exchequer, announced slower growth and higher borrowing. The slowdown in growth is not as great as some people feared in the immediate aftermath of the Brexit vote. Economic growth next year is expected to slow from just over 2% to 1.4% and then recover back to around about 2%. On the borrowing front, instead of getting a surplus, which George Osborne was planning for, he's going to be borrowing round about £20 billion a year still at the end of this Parliament. And that means the overall level of public sector debt and government borrowing over the next 5 years is going to be quite a bit higher. There are a number of reasons why borrowing is higher. One is the baseline is weaker. The deficit hasn't come down as quickly as the government expected over the last year. It's also because of slower growth in the economy, which brings in less tax revenues, but also because the Chancellor is planning to spend more on transport infrastructure and other areas of investment to try and support the economy as we go through a period of weaker growth after the Brexit vote. He's clawing back a little bit of extra money with tax measures, which are more of a technical nature, but there weren't any big tax rabbits coming out of the hat. This is not predominantly a tax statement. This is more about public spending and borrowing. From a business point of view, I think this will be seen as quite a business-friendly autumn statement. The emphasis on infrastructure, on supporting the housing market, on supporting innovation and R&D, those are all sorts of things that business was looking for from the autumn statement. So this should be seen as positive from the economy, even though we're expecting slower growth in the year ahead.